Well, let's talk about the global stuff. Back to the global stuff. Paul Gruenwald is Global Chief Economist at S&P Global Ratings. He's with us. Paul, great to have you with us here on the program. Thank you for your time. Suddenly this cloud of global growth getting hit very severely because of US-China trade war is lifted a little bit. Have you made any estimate changes? I was looking at sell-side brokers like Goldman Sachs. They've lifted the China GDP forecast. They've lifted the US GDP forecast. We actually had the Goldman Sachs guest with us yesterday. Any changes you've made at S&P? Paul, are you there?
Sure. Yes.
Go on, please. Go on.
Yeah. So we had a forecast March, and then we had to revise that because of the tariff escalation on U.S.-China, and we put out another one on May 1st. Now that the tariffs have mostly rolled back and we're on pause, we're probably back to that March forecast where we've got China's growth around 4% this year, and the U.S. probably still closer to 2 on an average basis. But you are correct. I think this pause and reduction U.S.-China tariffs gives a little bit of tailwinds to growth, at least over the next 90 days. We'll have to see how that pans out.
Yeah. Got it. We'll have to see how that pans out. Just one point, Paul, if you will, and this is with regards to India, right? India was looking like it'll be the first in line to get a trade deal. Yesterday, we got news that India is gone to the WTO and proposed retaliatory tariffs on US aluminum, steel, etc. You know, there's some chatter here, and maybe it's an unfair question to you, but that it's kind of is showing unhappiness with what the US is really doing on the some of the statements which have come with regards to India, Pakistan, and the conflict here. Leave that as it may. But what is your own sense on this issue here, India and India and the US, and a trade deal and a potential trade deal?
Yeah, so we've only had 2 trade deals so far, and both of them have been provisional, right? We had one with the UK that was announced last week, and then we had the one with China over the weekend. We don't know whether those are templates for other deals, so it's hard to say what's going to happen to India. In the news reports here in New York, they are, of course, reporting that the U.S. is talking with many countries, including India. The pattern seems to be, for now, that the 10% that was announced on Liberation Day is a floor, and that so-called reciprocal tariff on top of that is up for negotiation. So again, that hasn't been declared as a template, but that seems to be the model the U.S. is using. I'm not sure China would be kind of a prototype, because that's a special, relationship with the U.S. and China. India might be with sort of another group, but remains to be seen what the actual negotiating space is. But that 10% does appear to be a floor for most of these negotiations.
Sure. Paul, on US-China, so it's a big climb down, right? From 145% to now they're at 30%. It's massive. Now, we don't know where it finally ends once this 90-day window is over. What's your best case sense? And more importantly, I think most are predicting a recession in the second half in the US right now. Do you think that can be averted? Or even if the US does go into a recession at some point this year, will it be a very shallow and fleeting one?
Yeah, let me take the second question first. We actually do not have a recession in our U.S. baseline, but we do have a very steep slowdown in growth. So let's remember the U.S. has been growing almost 3% the last couple of years. So we came into 2025 growing almost 3%. We think that's going to end up between 0 and 1. So we have a pretty big deceleration, but it's not actually a technical recession. And again, developments over the weekend with US-China suggest the recession probability probably went down a bit. We're sitting at around 35% right now, but we'll be revising that in the coming weeks. Where US-China lands, that's really anybody's guess. I think we're all pretty confident saying that the triple-digit tariffs on both sides were not sustainable. That actually ground trade to a halt, as we know. But now we're at 10 on one side and about 30 on the other side for Chinese.
Yeah. I think we've just lost that line with Paul.
Like 6, one really knows.
Right. Paul, just one last question. You know, if it looks like, you know, the US has really, in a way, blinked first, and China's kind of sort of given in very little to get these tariffs down to this, and now, of course, there'll be further negotiations, which means US, you know, this entire thesis that, you know, US will collect so much in tariffs that they'll be able to lower taxes for Americans, and then there'll be a boost on that front. I mean, all that on the corporate tax front, etc. Does all that look a little shaky now, Paul?
Well, to be honest, we were never really true believers in that. Tariffs look like they're going to bring in something like $8 billion per year, which is not nearly enough to cover U.S. Income tax payments. And we were also a little bit that we're going to bring manufacturing back to the U.S. Our view is that there's no winners from the trade war, and the tariffs are actually a tax that's mostly paid by U.S. consumers. So we're pretty heartened to see the tariffs rolled back, and hopefully we can get them as low as possible. That's going to help growth and everything else, help central banks, et cetera. It's going to keep inflation lower. So we'll have to see how all of this develops. You know, Trump's style is very unorthodox, as we've seen so far, and we've had very volatile trade policy from the U.S., and we'll just have to see how that develops in the coming quarters.
All right, Paul, good conversation. Thank you very much. Appreciate you joining us here.
My pleasure.
On CNBC TV 18. Well,